conversation with Sanjay Sethi, the MD and CEO of Chalet Hotels, to find out if hotel space is indeed going to remain a hot one. Good morning. We've all heard about how getting a hotel room is so difficult. Revenge travel, which is now continuing to be the norm. The question I want to ask you is, after great results that we saw in the first quarter, going forward, are you still seeing those kind of bookings? Are prices going up? Are occupancy rates getting even better?
Good morning. It's a pleasure to be here, and especially on Teachers' Day. I think the life lessons learned are the biggest teachings of all times. And I think the last 2.5 years have been a great lesson in life. You're right. The business continues to show strong resilience going forward, leaving aside the regular, valleys and peaks that happen on account of holidays. But besides that, it's normal business, back to normal actually for everyone. Business travel is back. Leisure travel continues to be strong. The MICE segment is doing extremely strong, and we see strong resilience on the wedding side also. And the good part is the people are eating out. Restaurants and F&B is doing extremely well in all our hotels.
Okay, so let's take all of that up one by one. You said MICE, which is corporate travel, is making a comeback. How far would you say is it from the pre-COVID levels? And what about international arrivals?
So look, corporate travel overall is back to pre-pandemic levels. I think domestic business travel, which in Q1 for us was 2x of Q1 2020, has led from the front. International business travel has still been slow. It's roughly around 60% recovery from pre-pandemic numbers. But I think the real traction will start from October, November onwards, when the true season of international travel happens in India, in the better months. MICE stays strong, both corporate. I'm actually seeing a lot of corporate events happening, incentive meets, dealer meets, sales conferences, all of them.
Sanjay, I want to talk about, why you're in the news this morning. Your wholly owned subsidiary, Chalet Airport Hotels, I believe, is executing the license agreement with Delhi International Airport. You're going to be designing, developing, financing, operating and managing the terminal hotel at the site opposite T3, I understand. Tell me, what kind of revenue will you generate, and how is it that you're going to scale up these plans eventually?
So, look, our hotel is going to be roughly a 400-room hotel, give or take 20 rooms here and there, depending on how the design pans out. But it'll follow the trends of the existing hotel rooms that we have in Mumbai. It should be in very similar line as JW Marriott at Sahar at airport, which means that we should be able to throw up anywhere between 17 to 20 lakhs of EBITDA per room per year. And the revenues should be about 2.5x of that. The true test, I think, will be of how occupancies pan out in that hotel, because typically airport hotels tend to do 90+% occupancies. In some cities, actually, they touch 100%. And let's see how that pans out, because this doesn't have just connectivity to T3. It also has connectivity to T2. So actually, 2 out of the 3 terminals will have direct connect into the hotel. From the terminals, people will not need to take any form of vehicular transport to come to the hotel. They can actually walk across.
Sure. Aside of this, tell me what is in the pipeline for Chalet Airport hotels? What more are you bidding for?
I'm sorry, I keep losing the first few words of the audio, and the video screen is not on either.
Okay, I'm gonna try again. I wanted to understand what else is in the pipeline for Chalet Airport Hotels. Besides this project, what is it that you're looking at? What is it that you're going to be bidding for next?
So for now, this is the one that we've bid for. We won the bid. We actually executed the license agreement last week. And I think our focus will be on getting this going. This hotel comes in form of shell to us. So the early part of the development cycle will actually be executed by DIAL. We get involved a little later for the fit outs, interiors, MEP work, etc. So at this point of time, besides the already announced projects that we have, and we've got quite a few, and this, I think we have enough on our plate for now. As and when opportunities come, we will continue to explore them.
Mr. Sethi, hi there. Good morning. Avan as well joining in. What is the outlook in terms of the hospitality RevPAR? Has it grown versus the pre-pandemic levels that's been fueled by, better occupancy growth as you've been talking about, better ARR?
So I did see the recent reports that came out from, I think, JLL and HVS took out recent reports for the month of July. August hasn't come out as yet. But it looks like it's more or less the same RevPAR as pre-pandemic. So it seems to be, as I said, business back as usual. And this is the weaker part of the year. Once the H2 starts, you will see a lot of traction and improvement.
What about the CapEx plans in terms of the outlook as well, in terms of addition to the hotel inventory? What's the game plan now?
So we've got quite a few hotels and non-hotel assets under development right now. You'll probably be aware that we've got almost 1.5 million square feet under development between Bangalore and Mumbai on the office front, where we have office assets coming up. We've got a hotel in Hyderabad, which is 168 rooms, which will be ready by January of next year. We've got an addition of 88 rooms in Pune. We've got potentially a 135-room addition at Bangalore. So there's a lot happening. In addition to that, we're exploring a couple of other opportunities.
All right. We look forward to speaking with you on some of those plans as well. But for now, thanks for giving us an insight as